Okay, everyone, welcome to my stock market technical analysis. We're going to do a closing market wrap video because we had some things happen today that I think it's important to point out. So I'm going to go through the major indices, and then we'll look at a couple individual trades and stocks, and hopefully that just gives you a general idea of what's going on in the market. And then if you've got an individual stock that you're looking at, and you've taken my course, my technical analysis training course, link is in the description below, then you'll be able to kind of use this video to hopefully give you an idea of maybe where that individual stock's going to go as well. All right, here we go, and we'll start off with triple Q. So selling today, right? Yesterday they popped the market rallied on the Fed announcement, but all of that plus more was faded today. So you just have to read into what that is saying. If you look at the daily here, here's the Fed pop. And then today they gapped down and just sold the thing down pretty hard, into the close. So extremely bearish close. You look at the close here, it treaded water a little bit throughout the day, but then just ultimately just gave it up and sold impulsively down. So that's a breakdown. That's basically a sell signal. I pointed out in my earlier video just to watch this low. Right here, I drew the line out at 315, and I was saying, you get that hourly close below 315, that should be all she wrote. We should roll over, and that's exactly what happened. So there's your hourly close, and obviously it rolled over. So the way to trade that is you see it starting to break down. You can jump in, take the trade, before the hour closes, and if it recovers it, you just bail. But if you get the hourly close, you got a good good position. Entry point, and it's rolling over. So that's very weak. All right, that close was a pretty weak close. We closed down near what looks to be kind of the next small level of support, down here at about 310.80 or so, 311, somewhere right in there. So we're getting close. We're probably going to find some sort of support right in here, maybe get a little bounce, but that close, the price action that I'm seeing today is telling me that we're likely going to make another leg down. All right, if you look at the daily, what you really want to, we have a downtrend. Obviously, you could look at this as like a breakout and then a back test, but that's just looking at the short-term pattern. You always want to give the bigger pattern more weight, and the bigger pattern is this big uptrend, right? This big, huge uptrend that the Qs was in since the March 2020 lows. You put in the bearish rising wedge, and see the green bearish rising wedge, and then you put big negative divergence. And that big negative divergence oftentimes is good for more than just a little breakdown, then off to new highs and starting a brand new bull trend. That's not usually how it works. So this big negative divergence tells me that when we broke and got the sell signal right there on the Qs, you make your first leg down. You make you get a bounce off of that major support at 297. We bounced, pretty good bounce, from the 297. Your bounce up to, it's a 9% bounce, and then you roll over and make your next leg lower. That's how the downtrend works. It goes in waves, right? You go down, you bounce, you go down more, you bounce, you go down more. So it should continue to do that. And as I can tell right now, this gap right here was the potential maximum upside target in my mind. I thought that if we were going to get up to 330, that would be the maximum upside target. I'd want to reshort up there. And that could still happen. We could bounce off the support and bounce up to 330. But I'm leaning a little bit more towards this was the high. We saw the bounce and we're rolling over. Just with the price action today and how they sold it off after the Fed, that's just, before the Fed, price action before the Fed, you can see here all week was kind of, just rallying a little bit higher. Price action before the Fed. Even during the Fed, they were buying, they bid it up. But after the Fed, and especially, we gapped down today, and then into the close, they sold it off pretty hard. That the Fed is out of the way, so what institutions decided to do was sell the market into the close. That's just bearish price action in general. So So we saw that Qs continues to roll. I think it's likely that Qs is going to roll down to 297, break that level, and head straight down to 285 at this point. So I'm positioned for that at this moment in time. And that's what I see in the chart. SPY, pretty impulsive break here. I pointed that out in my earlier video, that just look for this 394 area to break. And when it broke, it continued to sell off. So looking for SPY to probably start rolling over. And one thing I've talked about in my videos is the fact that the Qs made its first leg down, but the SPY never really sold off, and the small caps never really sold off. So I was expecting broader base selling. Market corrections, if this is just a correction or if we're starting a bear market, but even in a bear market, it goes in waves where you'll make your first wave down, then you'll get a big bear market rally. So we'll just take each wave as it comes. But market corrective waves down don't just end with one, with some tech stocks selling off and then the S&P just continues on and doesn't even flinch. Usually those corrections end with broad-based kind of panic selling, where you have broad-based selling across the board and there is panic selling. And that's usually when you start to see the end of a corrective wave. We haven't seen any of that panic selling. The VIX has been remained relatively low. There's been not a lot of buying in the VIX. So again, that tells me that this corrective wave is not finished. And I think that we're going to start to see that broad-based selling soon. So we saw some selling today in the SPY. Let's look at the IWM. So the IWM, we're starting to see that break now. And I have this line drawn out, but I don't think this will hold. But here's the IWM. All right, there's your sell signal now in the small cap. So there's your daily uptrend line right there. I've talked about this one in many, many videos. We had a breakdown, which was a bear trap. We rallied, but the rally was literally just a divergent high. I've got that circled right down here. See the negative divergence? And so that divergent high has a high probability of failing, and it failed right at the major resistance line, 234.57, and we now have a breakdown. There's an impulsive break, all right? A big impulsive red candle. It looks like that one, right? That was an impulsive breakdown too. And that, they rallied that back up. And they could do the same here, but you got to take each breakdown as it comes, right? And then just act accordingly. Trading is all about taking the signal that has the highest probability and then managing the trade and acting accordingly with, as you see it. So we got the breakdown here. That's a sell signal. I'm looking for more selling now in the IWM and the small caps. I think we're heading down to this major trend line. You can see it coming off the March 2020 lows. We held support here. So I think we break and go right down to there, probably around 200. Okay, so that's what I see there in the small cap. So we have weakness now in the small caps. We've got weakness in tech. We're starting to see some weakness in the SPY. Volatility popped a little. Let's look at the VIX just to give you guys an idea. So yeah, we saw volatility spike a little bit today, and it's interesting that we kind of filled this gap right here. Look, didn't quite fill it, but yeah. So watch the VIX. I'd expect the VIX to pop if you're going to see more selling. All right, and especially broad-based selling, I'd expect the VIX to pop. The one level that you want to watch. On the VIX, you've got this gap right here, right? And the VIX has been trading above this gap for the most of the time, really since it broke back in 2020. Just little whips below, and then it's back above. Most of the trading is taking place above. So you can see we dip below. Today they're popping it right back up. I look for it to pop right back above and possibly spike, because I'm starting to see signs that there's going to be broad-based selling in the market. So that's one thing I'm looking at and watching for is a spike in the VIX. Where's the VIX go to? It's hard to always understand where the VIX is going to go to, but obviously you have these kind of spike zones here. You can see that the VIX has, every time it's spiked, it's kind of gotten up to that range of 38 or so, 38.40. So that could be the area, where it's going to spike to. And then on the UV, like something like UVIX, at this point in time, first level of resistance would be 1036. Again, we've got a level all the way up here at 1275, another level all the way up here at 2340. So watch those levels. It's not going to get there in one day, obviously. That would take, weeks of selling basically. Okay, XLF, you can see today they closed it right at support. So it hasn't broken the trend line, but it's starting to show signs that it's going to break. But it hasn't broke yet. So what you want to do is, if you're long this thing, I just stay long. But if you get that sell signal or that impulsive break of this trend line, that's your signal to either take a short or to bail from your long. Again, everything in this channel is just my opinion, but that's what I see in the chart. Here's gold bullion. So yesterday they popped it, today they sold it down, but it rallied into the close, whereas the market continued to sell into the close. Gold kind of rallied into the close and really held up pretty well. You can see over the last couple days, you just knocked those out, and gold's exactly where it pretty much was in this range previously. So given that, I'm still seeing strength in gold recently. It's still looking like it's kind of trending up over the last couple weeks. So I still see some more upside here in gold. It still looks good to me. And another reason why I like gold is just the miners, and I'll just look at the GDX, which is kind of a miner ETF, and look at the GDX. You've got a major support line right there at 3130. This is going back to 2013. It was resistance for many, many years. Then it broke above, held support all through here, and then ramped higher, came all the way down, and look at what happened. It undercut it just briefly right there. And when it did that, it also did it with bullish divergence. I have that circled. See the bullish divergence? It made an equal low as the previous low. So this low was on higher price. This was on lower price, but the momentum was an equal low. Slightly, maybe slightly less. No, it's divergence. See how it's like an equal low basically. And then if you look at the PPO, clear bullish divergence there. So again, and that was major support. Undercut it a little, but it held and it's moving higher. So in my mind, this looks good for, potentially was the best buying opportunity in the miners that you could have for a while. So I think we're, longer term, I think we're off to the races for the next leg higher. That's what this looks like to me, but we'll have to wait and see. I like it. Let's look at apps. This one, you can see we're just below that trend line, looking weak. So in general, I think we're heading lower. My target for this, next target, I guess, of support would be about 42.50, where we'll probably hit the 200-day moving average. I like that. Here's AMD. Look at that. Bearish close and a daily close below the 200 again. There's the 200-day moving average right there in that little blue line. We're below it. Pretty substantial rejection and impulsive selling. So as far as I can tell, this thing topped AMD here from the 2016 bullish trend. It looks like with this divergent high, that was signaling a trend reversal, and now we're seeing price action breaking support. So you broke that support, you back test, and you roll over. So look for continued selling. AMD, I think, likely is heading down to this $59 range before finding some sort of meaningful support. Tesla's starting to break down, but again, guys, before I continue, I just want to let anyone who's following me know that I am actually going to be on vacation tomorrow and Monday, and I'm not going to be able to put out a video. So that's one of the reasons why I'm doing the closing market wrap video. I'm just not going to be able to put out a video for the next couple days. So I want to just point out these key levels, and everyone will be able to just hopefully you can use the levels, and I will see everyone back on Tuesday. So Tesla here breaking down. What I'd watch for Tesla is just a break of this trend line right here. You can see, I probably can adjust it slightly as well. But a break of this trend line, an impulsive breakdown. Right now it's sitting about 644.50. You get that break and that impulsive break, then I think we're likely just heading lower. I'm going to get rid of that one. So look for that. And if we break, then I think we're heading down to 462 for the next support level. Carvana, just what I want to point out here. So we've had this bearish rising wedge that it's been bouncing off of for quite a while. It's put in big negative divergence also for quite a while. So This is all divergent high price action. I mean, literally, it's pretty massive. All of that right there, each new high that is made has been a divergent high. All right, you'll see the negative divergence. It's just, this thing's just been losing momentum like crazy. And we got a break. Here's your break. They, whipped it a little bit, recovered, and now we're breaking again. So this was kind of a fake out, it looks like, recovered, but now, now we're breaking, and this to me looks like the real deal. So where are we going on Carvana? Well, you do have this longer term support down here. See this longer term support line? I think we're heading down there, actually, to be honest, and which is right now going to be down around 161 or so. So that's a potential drop of 40%. Yeah, that's where I think this thing's heading in the near future. Here's PayPal. I've been covering this one. So again, all these stocks, they had a bounce and they're all looking like they're continuing their downtrend. So PayPal, you had this trend line here. Fake out move when you broke to the upper end of a bearish rising wedge. See the wedge right here? The blue and the red line mark a wedge, a rising wedge. Those usually break to the downside. When you break to the upside, that's a low probability area that's going to continue. That failed. That proved to be a fake out, and now we've broken. Here's your sell signal, breaking the lower end of that wedge. Get a kickback rally and continue to sell off. So I think this one continues to roll over. This one has the potential to come all the way down to 129, 130 area, which is this gap down here. I think a gap fill makes sense for a sell-off in this stock. That would be a pretty substantial sell-off before maybe you find a good, get a good bounce. Redfin, more selling today. Just, again, all of these ones I've talked about in many of my videos are, weak. Snap's support closed on support right there, so we'll look for a break of that, or what that wants to do. Now, if that breaks and you get another breakdown, which I think is going to come because this looks very similar to Carvana. You get that impulsive break, I think that'll be the real deal, and I think it's likely we're going to roll all the way down here and gap fill at $29. That is a drop of about 50% in Snap. So I like that. If you get that sell signal, what I'd look for is a break of this trend line, an impulsive break, and close below that. and look at the negative divergence on Snap. It's just been building and building, telling me that we're going to break and get that. So I think that one's a good one if you get that sell signal. That's just my opinion. Big move down here in oil and crude futures. And again, oil often will sell in the same direction as the S&P 500. So when the S&P 500 sells off, oil sells off. They usually move in the same direction. And look at that sell signal there in crude. You can see the oil futures. Daily chart here, this has just been grinding higher, or moving impulsively higher in an uptrend. But that is a sell signal right there. That's a clean and clear sell signal. Now we're at some support. You can see we held support here and here on the daily. So we're likely going to get a little bit of a bounce. But I think that bounce will be faded. And to me, it looks like oil is going to come down a little bit more. If we break lower, the next level of support I see is right down here at about 54. And yeah, we'll just watch that for now. 54 area. This is crude futures, CL. But obviously the XLE and a lot of these oil, I've got levels marked out here, to watch. 44.77, 47.20. That 47.20, that's the top of that gap. So we'll probably get a little bit of a reaction there. But again, oil's been on a tear, so I would expect if it's going to unwind, it's likely to unwind quite a bit. So we'll see. We'll see how things go. On this XLE, you could look at, I would say a good target for this is about this $42 range. That was the former gap right here on this cluster, this island top cluster reversal. And you can see we held support or resistance there. So I think that 42 range, it would be a good target. And on XLE, that's a continued drop of another 15 or so percent. I would say that's a good target for this drop, and maybe that'll hold right in there. Commodities, I'll just run through these real quick. They all They all kind of broke support. Corn, you got some support. I've got lower levels down here. What I would be looking for on this corn, this is a pretty impulsive breakdown, but it could have been worse. But if corn comes all the way down to say 1420, or even does a back test of this downward trend line, see this downward trend line right here? If we come down and tag that, correct basically down to there, that's the buy zone. I would look at buying corn down there. Joe, you got some support right here at about 36.50. So you got to break that. We break that. I would look for a move all the way down to 32.40, and that's kind of the buy zone that I see in coffee. Soybeans, I haven't been tracking that much. Wheat, it's a breakdown. It was worse. It bounced off some support right here at about about $6 and held. Big impulsive red candle though, and look at the volume. So I would look for wheat to probably sell off. I haven't been charting this one too much. I've been more interested in corn and coffee. Let's see, lumber. I've been keeping an eye on lumber. It broke the other day with a big impulsive sell-off. Wood didn't sell off when the futures did, but I've been looking at this because I know lumber's just been out of control to the upside. So I've been looking for opportunities to potentially short it, but yeah, it's not my favorite. And, we'll just wrap with these FANG stocks. You can see Microsoft heading back down to that support. So 227.75, that's a key level. If you break that level, I think Microsoft is heading all the way down to 200. All right. And that's going to drag. That will likely happen in the next leg down. If the Qs is going to continue to sell off, Microsoft's going to be probably down at 200. So that's a good size move for Microsoft. That would be a drop of another 14% or so. And so watch that level. Really, this is the key level that I'm really, interested in. Now, let's say it's likely going to close here and maybe it'll gap down. All right, that's just something to look for. Amazon's gone nowhere for many months, really coming up on 9-10 months or so since July. Again, we could be seeing a top in Amazon. Google, sold off, but still holding this sideways range. And Apple, sold off, still kind of in this consolidation range. So a little more work to do, obviously, on the FANGs, but just wanted to point out some of these levels. If here's Apple 118.50. Watch that level. You get a break of that. You got the 200 right below. And that's the one thing I pointed out. We never touched the 200 with Apple. We sold off. You had a sell signal. Here's your trend line on Apple right there. See that nice clean upward trend line? We then have negative divergence. See the negative divergence? So this was a divergent. This really was your divergent high right here. That's your divergent high. So negative divergence has a high probability of failing. And we did, we failed. It sold off, broke trendline support right there. So that's basically a sell signal. And we came close to the 200, but never even hit it. So that told me, okay, that's likely not the end of this bounce. That's one of the things I've been watching is one, we haven't had broad expanded selling in the S&P 500. And then two, many of these major large caps like Apple never hit their 200. So it just didn't look convincing that was the end of the selling. All right, it looked to me like there's more selling, and now I'm starting to see signs that we're continuing that selling. So I'm going to stay positioned that way for more selling because I'm just seeing more confirmation today. So yeah, look for a tag of the 200, and if we break the 200, then we're probably going to head much lower on Apple. Apple has the potential. You can see this trend line here. See this upward price channel going back all the way to 2010. So this is basically the bull market. And we overshot that a little bit here in 2020. This is Fed induced, but for the most part, overshot it. So if we're going to break that 200, then we're probably going to come all the way back down to this trend line down at $80. And then we'll see. We could obviously go lower, but we'll just keep an eye on that. I try to point out, this is longer term stuff when I'm pointing out these way lower targets. It's not going to happen in a day or a week. It's going to take months. But could happen a lot faster than you think as well. You know, when there's sell side activity, it usually happens a lot quicker than you would think. So, but those are longer term targets that if we get down there, those are things to watch, areas to, you know, potentially cover shorts and you know, whatnot. Okay, that's all I got for today. So I'll be out tomorrow. I'll be out on Monday. I'll be back on Tuesday. Hopefully this helps. Give me a thumbs up if you find value, and if you are just interested in learning how to you know, chart yourself and find stocks and find chart ideas that because I can't point them all out. You know, I point out ones that are interesting, but there's a lot of trade setups out there that I don't know about that, you know, you might be able to find. Take my course. I'll show you exactly how to do it, how to, you know, how to find the stock and look through the chart, and how to examine the trade so that you can find these setups and then you can take action when the setups trigger. And so that's in the course. Link is in the description below. It's a good course. It's $99. It's not free, but it's a really good value for $99. So, and I will catch you guys on the next one. Bye.